everyone. Good afternoon. Hi, Tola. Good afternoon.
Hello, Ben. How are you?
I'm doing great. Thank you. How are you too?
Well, it's great to be alive. Great time to be alive.
Sure. So it's 2 minutes to 5. Let's allow our people join in. At 5 p.m. on the dot, we'll kick right in. We'll get right into it.
Yeah, sure thing. That works perfectly for me.
All right. Welcome,
Okay.
everyone. Friends, from your neighbors, let's talk about MREIF. One minute and we're live. Keep joining. So we're going to be asking you lots of questions. Are you prepared?
Is anybody ever prepared for an exam? You don't even up until the last minute when you're like, you're still trying to grab your books, like, come on, let me try and, catch up on this reading and that sort of thing. So I'm not really sure I'm going to be 100% prepared, but hey, shoot when it's time to shoot.
All right. So I think it's time to shoot. It's 5 p.m. on the dot. I want to say welcome everyone to this live session with Mixta Africa and of course Mr. Tola Akinsulire, who is the Chief Commercial Officer of Mixta Africa. So going right into it, this discussion is pretty much centered around MREIF. Say this time last year there was nothing like MREIF, but I mean it's a year. It's March 2025, and there is such a thing as MREIF. So we'll just jump right into it. Tola, could you please just introduce MREIF? Give us an overview. What does MREIF mean, and what are its objectives, basically?
Okay, good. Thank you very much. So the MREIF means Ministry of Finance Incorporated Real Estate Investment Fund. And it's pretty simple, its objective. Its objective is basically to raise funds, and from that fund, it's going to provide long-term affordable mortgages at the rate of 12% for up to 25 years to Nigerians, and at the same time provide off-take guarantees to developers who want to develop affordable homes. So that is really the summary of what the MREIF really starts for.
So if I get you correctly, MREIF is a fund that seeks to provide off-take guarantees to developers and affordable long-term mortgages to home buyers. So what really is the benefit to home buyers? I hear you say, offer long-term mortgages, but, maybe take a deep dive, explain that in more detail to us, please.
Okay, to explain that, I think you really have to look at how it is that we currently buy houses. So at the moment, anybody who wants to buy a property or buy a house either has to have plenty of pockets with plenty of savings, or you have some uncle who likes you enough to be able to give you the money for you to be able to buy some property, wherever it is, if you have that kind of an uncle. And so what you find out that because of that, the way most people build is the way people acquire homes is number one. It's either you do incremental development, whereby today you find money, you go and buy land somewhere. After you buy land, the next thing you find money, you build the foundation, and you start moving gradually. Now, the problem here is that because people don't have that bulk money to be able to buy a property that you see immediately, they have to go that incremental. Now, what MREIF allows you to be able to do is this. If you find a property that you like, MREIF is basically saying that if you find a property that you like and you can meet the necessary criteria to access mortgage, then you'll be able to receive funding. MREIF is actually starting with up to a maximum of about 100 million. So yes, you can get mortgages up to about 100 million to acquire that home that you want without you having to wait for a long time or wait for that long lost uncle that is going to dash you some money from somewhere.
Okay, so speaking of uncles, I mean, we know the situation of the country right now. Not too many uncles are willing to buy, properties for anybody. So, for MREIF, how accessible is it, and how affordable is it? Because affordability is really a question for anybody who would want to, jump on this.
Okay, so I think to talk about how affordable it is, we'll have to look at two sides of the whole divide line. So at the moment, how do you get mortgages? There are two ways in which people can get mortgages. One, you can either get from your primary mortgage institution, PMIs. I shall call them PMIs for the purpose of this conversation. Primary mortgage institution is a long name to be called in every time. So PMIs, and then your commercial banks. And then on the other hand, you have your government institution, that's the National Housing Fund. Now, for the PMIs and commercial banks, what do? They basically give you mortgages for shorter period. I think maximum period that most of them do is maybe like 5 years at worst. You might probably go to find someone who do 10 years. And then the interest rate they're giving you is closer to 30% or even over 30% in some cases. And then on the government side, the National Housing Fund, yes, you can get single-digit mortgages. The only problem here is that it might take you over a year before you're able to get that mortgage. And on the other hand, sometimes you can find a situation whereby you make the application and they're not able to give it to you. And basically, it's because we all have to contribute into the fund for the fund to have money to be able to give some people. So that means if it doesn't have enough contribution, it's not able to give everybody. So if you combine what I would call the problems of both sides, on the private sector, they can give it to you at very fast, but the rates are very expensive. On the government side, they can give you cheap rates, but you might not be able to get it. So what you have is you have the MREIF. It has combined the speed of the private sector by before it starts issuing mortgages, it actually raises funds to be able to give people. So it has the funds available, and at any point in time, you know what it has disbursed per time. So there is the funding and available. And at the same time, it now gives you at the rate. It's giving you at 12%. Yes, it's not equal to the single digits of the NHF, but at the same time, it's far, far below the current rate of what you have within the private sector. So it sort of tries to take the best of both worlds, the efficiency of the private sector, and at the same time combining that with the lower rates which you get within the government sector. So in terms of the best of both worlds, that's what the MREIF provides to you.
I hear you. And I'm aware that mortgage banks usually would give mortgages at interest rates ranging from 28% all the way to 33%. So on affordability, I see how MREIF compares favorably. Now, the next question will be on this call. There's so many of us on this call right now. We're at different phases of our lives. So the question is, what makes one eligible, to obtain a loan, to access a loan, from MREIF? What are the eligibility requirements?
Okay. I think to talk about the eligibility requirements, I think one of the things you need to understand about the way the MREIF has been structured is the MREIF has been structured not to take over the responsibility of the existing players within the housing value chain. No, it's not taking over their responsibility. What it's basically positioning itself is it's positioning itself as a tool to help everybody do their work better. So you have PMIs and commercial banks who want to give mortgages. But the problem is that the capital that they have is either short-term capital or very expensive capital, which is the reason why they are giving at that 28% and about 30% in the 30s that you're talking about. And so what the fund is basically saying is that, look, I'm not going to duplicate what your PMIs and commercial banks are doing. Your PMIs and commercial banks are still going to be the ones issuing out the mortgages. The only thing now is this, I'm going to provide the fund for them to issue the mortgages. So speaking to the criteria for you to be eligible, it's still going to be the standard criteria that your PMIs and your commercial banks would. So for example, for those of you that are in paid employment, they would want the copies of your pay slip, the typical letters from your employers to be able to confirm your history and all those sort of things they require. And of course, if you are self-employed and you're owning your business, they would need your typical accounts, the bank accounts of your businesses, all the typical criteria that you need to go through already in this particular process. Like I said, the only big thing about this whole process is that the banks who are going to be issuing the mortgage, they are more at ease now to be able to give you for a longer period and at a cheaper rate because it's no longer their money. It's a fund that has been set up basically to raise that money and give that money to them.
That makes a lot of sense. So what you're saying invariably is that the fund is just providing the cash. People, everybody, regular Joes, myself and everybody else can just approach the same institutions we would normally approach for mortgages. The same requirements. It's just that the source of fund this time, not the bank or the mortgage bank, MREIF.
Exactly.
Please run us through the interest rate and what the repayment, terms would usually look like again, please.
Okay, so we're going to, I said we, the fund is going to be issuing out the mortgages at 12%. So the end buyers are going to be getting the mortgages at 12%, and they have up to a maximum of 25 years to make that repayment. So depending on what stage of life you are, of course, for someone like me, they probably only do 25 years because they look at me that, boy, you'll be working a couple of years, so you're closer to retirement. So yes, they probably won't do up to 25 years, but for people who are starting earlier in life, once you can meet the eligibility criteria, you have a longer period for you to be able to meet those, for you to make those repayments. And the beauty about it is that it gives you a bigger universe in terms of what sort of properties you can look at acquiring, because you have a longer period to pay. That means your monthly contribution, your monthly repayments, the typical cap for almost all PMIs and commercial banks is that the monthly repayment must not be more than 33%. So if you have as much as 25 years to be able to make that repayment, that means the universe of products that you can actually buy is a lot wider.
So I'm getting really excited about all these things you're saying, because sometimes I just open my Instagram, open my Twitter, and I see young people in the UK, in the US, in Canada, celebrating that they just put down 20% equity and they were able to access mortgages, where that they can repay over 20, 30 years. And this is a very welcome development. On social media lately, some guy has been bashing real estate people. And I really think that at the heart of all of those complaints is the fact that people are looking at the cost of property, looking at their incomes and seeing a mismatch in some way. So I see that mortgages want to bridge that gap and give people a longer period to repay and allow younger people become homeowners early, and it's super, super important. Now, Mr. Tola, you are the Chief Commercial Officer of Mixta Africa. Yeah. Now, I know Mixta is not a bank. Mixta is Mixta a commercial bank. So how then does Mixta come into this mix?
Okay, now, thank you very much for that question. Now, one of the things which the MREIF did in terms of the structuring of this fund is that, like I said, the thinking behind this fund is that, look, we don't want to take over the responsibilities of what the other players within the real estate value chain are already doing. What we want to do is we want to help them to be able to do better. So if the fund is hoping to provide mortgages for up to 25 years, you need some form of comfort to believe that, look, those homes can actually last that 25 years. And so what the fund has done is that it has done sort of like a pre-qualification of developers. And the whole idea of pre-qualifying developers is that it has assessed the history of developments that those developers have done and has found out that, okay, these developers, within the context of what I want to do for this scheme of having homes that can last at least 25 years, these developers meet that criteria. Now, on that basis, they've actually had different tiers of developers, and the tiers are dependent on the scale of the developer, the experience you have in the industry, and the volume of product that you believe you can deliver within the market. So you have your grade A developers, grade B developers, and grade C developers. Mixta comes under grade A developers. Now, the beauty about working with an institution like Mixta is that, look, for example, if you come to Mixta and you find a product in Mixta that you like, the beauty about it is that Mixta already has arrangements with PMIs and commercial banks that have already been accredited by the MREIF. So that means if you find a product from Mixta that you like, once you are able to agree on the commercial terms of that product, Mixta can actually link you up with the PMI and the commercial bank that's going to follow through on the rest of your process for accessing mortgage from the MREIF. So that's the role in which we play. So the role which we play in the whole MREIF chain is we are providing the type of homes that MREIF believes will be able to last that 25 years, which is providing mortgages for.
All right, thank you. So I'm thinking now, if I were to purchase a property from Mixta, and I want to access mortgage from MREIF, what would the process be? Like, please run us through, a step-by-step process to getting this done.
Okay, it's at this point that I say the process is easy peasy lemon squeezy, right? Okay, so let me run you through the process. So first and foremost, you come to Mixta, you look at some of our projects, you decide on the particular project you are interested in. And now, just to tell you, within the context of the MREIF fund, the buyer is required to make a 20% equity payment. So, for example, let's imagine you found the product you like and you've been able to agree the commercial terms with Mixta in terms of the price you want to take the product. You'll be required to make your 20% equity payment. Now, once you make, in the process of making your 20% equity payment, because of the relationship that Mixta has with the PMIs and the commercial bank, they would have introduced you to a PMI and the commercial bank. So what that PMI, during the process whereby you're trying to make your 20% equity payment, they would already be asking for all your necessary documentation to process your qualification. So once you've qualified, what you're just waiting for is waiting for Mixta to complete the product and then deliver. So at the point of delivery, it is at that point that the PMI will now send a request to the MREIF for MREIF to disperse the mortgage. So liability doesn't happen to you until we deliver the product. But the beauty is that you are within one ecosystem. You have a developer that is accredited by MREIF, knowing that it gives you the full confidence and assurance that, look, the product that you're getting, the home you're buying, is going to last that 25 years that they've already given to you for the mortgage. And at the same time, they also pass you to a PMI that is within the MREIF ecosystem, making a seamless integration and helping you to go through the process with a little less stress, if I would say.
All right. Thank you. Next, I would just like to ask, what's the funding for MREIF? Where are they getting their money from? And again, how sustainable is it? I hope they're not trying to put together, maybe you had said earlier that the maximum anyone can access is about 100 million. So I would like to know what's the size of the fund, what's the source of the money that's going into the fund, and how sustainable is it? So I'm asking this very important because if it's for only first 10 people, many people would start thinking, oh, maybe the people who are managing the fund would tell their friends and family members, and they shut the doors. So what's the source of the fund, what's the size of the fund, and how sustainable is this fund going to be?
Am I allowed to tell you that the source of the fund is coming from one rich uncle? Okay, so I think first and foremost, let's talk in terms of what's the size of the fund. So the first registration, it's a fund. So just to give you a bit of context in terms of the structure of the fund is a registered fund under SEC. So it meets all the typical criteria, guidelines for all your SEC registered funds, whether it's your mutual funds, your money market funds, your all the typical trust funds that you're familiar with. So it's registered with SEC. And in the first registration, which is it's a 1 trillion size fund. So that's the first size, that the first registration is 1 trillion. And in terms of the first,
can I come in here?
Yeah, you can.
A bit.
Yes.
1 trillion.
Yes, I said 1 trillion.
1 trillion naira or $1 trillion.
What is our currency in Nigeria? You want to put me on the spot? Then somebody from CBN will now tell me that I'm saying that Nigeria's fund is quoted in. Yeah, it's a 1 trillion naira registration for the first. So, and the way in which the fund is going to be raised is going to be raised in tranches. So the first tranche is supposed to close at 250 billion. Now in December, there was a fund raise, which was the government's funding pocket, which was basically about 150 billion. At the moment, the fund is currently trying to raise the second tranche, which is Series 2, which is 100 billion. So cumulatively, it's going to be kicking off mortgage issuance with about 250 billion. And what is meant to happen is that going forward, it's going to be raising different series at different points in time. Now, to your overall question in terms of where is the funding meant to be coming from? Now, the way the fund has been structured is that, one, there's going to be seed capital from the federal government, which the federal government has kicked off in December. Like I said, they put their first seed capital about 150 billion. In addition to that, you're going to be having private institutions like your insurance company and your PFAs who have long-term capital, who have long-term funds, and they would also be investing in the fund. In addition to that, you're also going to be having funding. There's also going to be a tranche that is going to allow Sharia investments. Yes. within the context of the fund, you're going to have opportunities to do Sharia mortgage lending. Yes, there's a structure in which that operates, and there's going to be a separate tranche to address that. In addition to that, there's also going to be a separate tranche that is going to address the interest of bilateral agencies, the international development institutions. So the overall philosophy for the fund is that at any point in time, you don't want to tie the funding of the fund to just one source. You want to make sure that you have multiple sources of funding. The foundation philosophy for driving the fund is that at this point in time, before you can bring foreigners or people from outside of the country to invest in the fund, as in bilateral agencies and things like that, you need to raise funding locally, which is why you are first starting with the federal government providing seed capital. After the federal government, now it's currently doing its Series 2, which funding is supposed to come from institutions like your PFAs, your insurance companies, and basically institutions locally that have a long-term investment frame in terms of their philosophy. So that's in terms of the size and in terms of how the fund is structured to raise funding. Over time, as the fund continues to grow, you're going to be having more registration. So you're not tied to the existing 1 trillion. So if you feel that the scale of intervention requires more, then there will definitely be a bigger registration size for the fund.
All right. I hear you, but I mean, we're in Nigeria and we're used to promise and fail. Are you saying the 250 billion has dropped into the fund account, or this is like a promise that will be fulfilled someday? Please.
Okay. Okay, you see, I like your skepticism. And the reason why I like your skepticism is because I have the answer for your skepticism. If it was skepticism that I didn't have the answer for, you understand, then yeah. So, like I said, one of the structures which they've implemented for this fund is that they've tried to make, yes, I like somebody has already said promise and fail, good. One of the ways in which they've tried to, this fund has been set up is, it's been set up as a SEC registered fund. Now, you're familiar with, and I think the best way in which I can explain it is your PFAs. Now, within the context of your PFAs, which I think we're all familiar, that's your pension fund administrators. You have your pension fund manager. In addition to the pension fund manager, you have your custodians, you have your trustees, you have all those sort of structures. Now, a lot of the structures that you currently have within the existing framework of your pension fund industry have been replicated within this MREIF fund. So to the point about the 150 billion seed investment that the federal government did in December, you know what was done with it? That money has been fully paid and deposited with the custodians. And not only has been deposited to the custodian, the fund manager is already in charge of that fund. So that fund is already outside of the pockets of the government. So it's no longer, so if you want to say at this point in time, if we were going to say we wanted to kick off mortgage lending, at this point in time, there's already 150 billion fully paid. I repeat, fully paid. And I'm going to repeat again, fully paid, so that nobody thinks I made a mistake saying it the first 2 times. And I'm going to say the 4th time, fully paid, that is already available for mortgage lending at this particular point in time. And the second tranche, which is the Series 2 that the fund is currently doing, the 100 billion, that is currently being raised from your PFAs and your insurance companies, basically institutions that have a longer term view when it comes to investment locally. So by the end of the whole fundraise process, this 250 billion is going to be cash that is going to be with custodian. And the custodian is not a government institution. Like your family, like I said, just think of it in terms of how the pension industry works, where you have a custodian. Yes, you have a custodian also for the MREIF, and that custodian is in charge of all the assets. And you also have a trustee. So, for example, just the same way under your PFA, the assets of the fund is registered under the name of the trustee. The same thing applies to the MREIF. All the assets of the MREIF are registered under the trustee, and the trustees, the custodian, the fund manager, all of them, they are all registered under SEC. If they misbehave, if they demo wrongly, SEC can cancel their licenses. So there is like I said, the beauty about the MREIF is that it tries to do the best of both worlds, bringing the efficiency and the speed and the transparency that you have in the private sector, combining it with the lower rates of mortgage which you are able to drive from the public sector, and to create an instrument that is able to drive addressing the issue of affordable mortgages during this period.
All right, thank you. So 1 trillion naira fund, 150 billion has come in, as you've confirmed. The next tranche is 100 billion, which we're expecting, and then the rest of it will be raised, as we get along. So that means people who get started with their applications as quickly as starting now or whenever the site launches, will be able to draw down from the 150 billion that the federal government has released, which you have confirmed right on this call. All right, thank you. So the next thing, what are some common misconceptions, around MREIF, and how would you like to address them? I know you've spoken about MREIF, but what are some misconceptions? Please help just clear all of this.
Okay, I think the most common question which I've heard from a number of people is that why is the MREIF not doing single digits? If you have the National Housing Fund, which is already doing single digits, why is the MREIF not doing single digits? And the general misconception is that because it is a government-backed, even though private sector run fund, it should be matching the rates like your NHF has. And I mean, it would be a good opportunity for me to actually address that misconception. Now, the way the fund is structured to raise funding through a combination of investors from both public and private sector. Now, please take note, your private sector, they still want close to market returns. And we're all familiar with the fact that the current interest rates regime that we're currently operating is a bit of a pricey rate regime that we have, whereby even government bonds are tending towards closer to 20% and that sort of thing. And so the reason why the fund at this point in time is only able to do 12% is because it is combining, one, the seed capital that the federal government is providing, which is going to be, the government is basically going to be taking a subpar return on that seed capital that is provided and matching it with the close to market returns that the private sector investors are asking for under this current high interest rate regime. And it's on that basis that it's combining and giving 12%. So the question you would ask me, are we going to be 12% forever? No, we're not likely going to be 12% forever, because as interest rates begin to come down and what the private sector begins to request for begins to come down, begins to moderate, what you're going to have is that by the time you blend the combination of the subpar returns that the federal government is willing to take and the moderating interest rate which you are getting from the private sector, it's not impossible. I am not promising that because I'm not the one who is managing the portfolio, but it's not impossible. Maybe we might be able to get to a single digit interest rate, but at this point in time, 12% is the best which they can offer.
All right. Thank you. So my next question to you would be, following the launch of MREIF, how do you see this impacting on the housing deficits we currently experience in Nigeria over the next 5 to 10 years?
Yeah. There are two ways in which I'd like to address the question. There is number one, the direct impact which most of us see, and that's the ability of everybody to be able to create mortgages, be able to access mortgage. That's the direct impact. For me, I actually see the multiplier side. Now, the multiplier side here is this: just the fact that an investor knows that if I go into any particular industry along the real estate value chain, I am able to achieve scale. Let me give you an example. And I know this is one of the challenges as someone who's had the opportunity of being part of different conversations when it comes to different methodologies for construction, some of the new technologies being proposed, which will allow for speed of construction. And one of the challenges is that the reason why most contractors or most factories would not be interested in coming to develop or set up in Nigeria because you don't have that level of scale. For me, one of the things I look at is that, look, if you have a fund like MREIF that's able to provide mortgage rates at this, mortgages that are backed with interest rates that are close to, almost close to single digit, 12%, is still closer to your single digit than anything else. It would go to encourage a lot of manufacturers of everything along the value chain to actually start to set up. So for me, I'm seeing multiplier effect in terms of being able to create jobs, and as it creates jobs, it increases the ability of people to earn more income. as people earn more income, they have the capacity to be able to buy the kind of house that they want. So what I end up seeing is that people who did not think themselves being able to even afford homes, because you now have this multiplier effect whereby you're creating jobs, incomes are rising, people are able to really live that kind of quality of life. You're going to be having a lot of people that are going to be coming into the housing sector, being able to buy houses, own houses. So for me, beyond just the initial, you understand, the initial thing that we're thinking of, I see a bigger multiplier in terms of the impact it's going to have across the value chain, the jobs that it's going to create, and the quality of those sort of jobs, the income they'll be able to earn, and by virtue of those income, they'll be able to afford housing. So it's not impossible. You may find people who are able to achieve the kind of income levels that they don't even require mortgage to even acquire homes. I mean, those are the sort of things that I see with regards to the impact that I see with the MREIF being able to address our housing deficit.
Okay, so Tola, I think you responded like a politician just now, right? Hear numbers. I would like to hear numbers. Do you think will be built because of the offtake guarantees you'll be given to developers? That's on one hand. How many new people do you project will become home buyers, homeowners annually? As a result of MREIF. I would like to hear numbers.
Okay, so yeah, you put me on the spot. Imagine bad guy, the baddest. Anyway, so let's come to it. So let's look at the kickoff fund that they're currently working with. So at the kickoff fund, you have about 250 billion. Let's even imagine for that 250 billion, everybody decides they want to get a mortgage. And let's say we cap the mortgage of everybody. I'm just throwing numbers at 50 million. That means with that 250 billion, you have at least about 5,000 people within a span of 6 to 9 months who should be able to afford mortgages. So that's about 5,000 people who are not able to own a home that, give or take, over the next 6 to 9 months, they will be able to own a home. That's in the so I can only speak in terms of what has been raised. So I can say that at this particular point in time, if this 250 billion closes, and assuming everybody's securing mortgages of about 50 million, that's about 5,000. Now, there is an aspect of the MREIF that I have not even spoken about, and that is the fact that all these mortgages that are being created, the beauty about the creation of these mortgages is that these mortgages would qualify for refinancing under the NMRC. And so that means it's not impossible that this 250 billion, you might actually be able to use it to create more than just 5,000 mortgages. You might actually be able to create as much as double that mortgage if you are able to refinance every one of them effectively under NMRC, meaning that you are able to package all the mortgages that are issued and make them qualifying mortgages to NMRC for refinancing. So what NMRC will do is that if you buy those mortgages and give you cash flow, and that cash flow can be used to create more mortgages. So it's not impossible if you can actually refinance the whole 250 million worth of mortgages. You can actually create up to 10,000 mortgages from just this 250 billion. And you see, there's still one skill that I'm hoping I'm going to have, and that's the skill of being able to foretell the future. If I had that, I would have been able to make mega billions. So because I'm not able to foretell the future, I don't know how much it is they will be raising in their future series. But I mean, if they can achieve that with just 250 billion, up to 10,000 mortgages, you can now imagine if they're able to close out on the 1 trillion or register additional series papers.
Okay, so I think that's a conservative approach to looking at the numbers. Already 250 billion has been raised. If we assume that over the next 4 years, we achieve the 1 trillion raise, it means that 250 billion every year can create 5,000 mortgages. But I still do not understand the NMRC part.
Okay.
So that's all. I think of the opinion that a lot of us here, know some of these things. We actually don't. So please run us through who is NMRC actually? Who are they? What's the process of refinancing loans? What's that process? What's it like?
Okay.
It's new to the entire mortgage thing.
Okay.
A lot of young people have got a mortgage. So now that the government is working on this, a lot of younger people would attempt it So it would be nice if we can have, a little more knowledge around how all of these things work.
Okay, I think the most important thing is that to the average everyday guy, you don't need to know about NMRC. That's the first thing I would say. And the reason why I said you don't need to know about the NMRC is that the person who needs to know about the NMRC is actually your commercial banks and your PMIs. Because what is basically happening here is this. Let me tell you how that process works. So let's imagine today you go to a PMI and you go and get a mortgage. The PMI likes you, you meet all your criteria and everything, and then on the basis of which it decides to issue you mortgages. Let's say at a particular point in time, that PMI has issued, give or take, about 50 mortgages to 50 different people. Now, what the PMI, I'm going to make it very simple and basic. Yet the PMI is just basically going to package all that 50 people and say that, look, NMRC, which is a government set up institution with that responsibility of buying mortgages and providing liquidity, is just basically going to say that, look, I have these 50 mortgages. These 50 mortgages, they have been performing. This is the quality of their assets. Everything is beautiful. All these people in this room, they are the best thing that ever happened since sliced bread. And, on the basis of which, what I want you to do is I want you to buy these mortgages so that effectively, as you're buying it, you are giving me cash, which I can use to issue more mortgages. So that's the simple, I think that's a simple way. So like I said, it really doesn't matter to you as the end user. It's really more of the PMIs. And the reason why NMRC has not really been able to do its work as much as you would have wanted to do is because you don't have that scale of mortgages, which is the beauty of what the MREIF offers, because you now have mortgages at scale, meaning that the NMRC now has the opportunity to actually do its work of buying that bulk set of mortgages and providing liquidity for the value chain.
All right. Thank you. So I think I have an understanding of what they do now. Now, so there are 54 of us on this call. For people who are on this call right now who would like to take advantage of these mortgages, use that to purchase a property from Mixta, right? Which of the estates Mixta has developed can people who are on this call, their friends, their family members, which of these projects can they key into, and what is the very first thing they need to do right after they get off this call?
Okay, so at the moment, Mixta actually has about 3 projects which it's put under its affordable housing framework. So the first of the project is Beetroot Park. Beetroot Park is actually a project that we've completed a number of visits. All in all, the cumulative about 400 housing units, which you already delivered and handed over. So you actually have livable communities within that particular estate at the moment. So the homes that are there are already on ground. So if it's a project that you are interested in, most of the homes are all bungalow types. So they are not apartment blocks, they're all bungalow types. So if it's a development you're interested in, you actually have the opportunity of going to look at some of the properties, see the properties that you really want. You already have a livable community. You have people that are living their residence community. So that's Beetroot Park. The other 2 projects are projects which that we are currently in the process of construction, where the construction is ongoing. The first of which is the Marula Park, which are apartment blocks. So you have 1, 2, and 3 bedroom apartment flats. And then you have your MREIF estate, which is under our Mixta homes. Under that, you have 1 and 2 bed apartments. Construction for Marula Park and the MREIF estate under the Mixta homes is currently ongoing. So you probably need to wait a bit before you are able to get your home, as against Beetroot Park, whereby if you can agree the terms and everybody is ready to smile to the bank on the same day, you'll actually can. Yes, in terms of locations, the location is basically in Lagos State. It's on the Lekki Epe Expressway. If you're familiar with Lakaway Lakes Golf and Country Estate, it's actually within the same vicinity. Lakaway Lakes Golf and Country Estate is actually one of our projects. So basically, you're going to be next door neighbors to the big boys, literally. So you can say that you're also one of the big boys too. Anyway, that you're hanging out with them. So in terms of being able to get access to that, I'm sure on our Instagram page, on our Instagram page, you can actually find links to our website, where on our website you actually have access to be able to see those products. And you can actually get in contact with any one of our team members who can take you for an on-site. I mean, it would be a wonderful opportunity for you to actually go to the site, have a look at it, and make up your mind. You understand? In terms of prices, there are different prices for different products. So I'm not going to go through every single one of them. As much as possible, I want to focus this conversation on actually giving you value in terms of understanding what the MREIF is. But if you really want to follow through, you can actually click on the link on our website, on the Instagram page, which leads you directly to our website, and you can find all the information in terms of prices and everything about the project. Yes, the first one I mentioned is, sorry, I can actually see somebody's question. There's the first one, B2 Park. Yes, that's the first one, B2 Park. Yeah.
Oh, wow. Thank you so much, Tola. You've enlightened us. I mean, to everyone else on the call, this means that we're turning a corner as far as home ownership, as far as mortgages to buy homes, is concerned. So there's no longer the excuse of I cannot afford to buy a property, therefore I do not own a property. So right now you can come up with as much as 20% equity, which is just 20% of the cost of the property you like. The federal government, through MREIF, which is the Ministry of Finance Incorporated Real Estate Investment Fund, can now provide, affordable long-term mortgages with interest pegged at 12%. And as Mr. Tola has told us, the interest over time would even come down lower than 12%. And the repayment period spanning from 1 year all the way to 25 years, depending on how old you are. So all of these things, these are things we used to see, our contemporaries in the Western world, enjoy, but right now it's been delivered to us. So I believe there's no reason why we shouldn't really take advantage of it. As Tola has said, if you want to know more about this, there's a link on the bio on the Instagram page for Mixta Africa. Click on that link. If you cannot even find answers to the questions you have, you can just fill any of the forms and a sales representative would be in touch. But Tola is still here with us. If you have questions that you think we have not touched on at all in the course of this discussion, you can please drop them on the comment section and we'll read them out and have Tola respond to your question. So we'll leave a few minutes for that. If you have questions, there's no outrage. So someone is asking if I'm interested in a property under a developer that is not registered to MREIF, can that also work? Over to you, Tola.
Yes, it can work. And what you have to do is you just have to go through a registered PMI. So what would happen here is, and the way it goes, I'm sure you still, I've already said, anyway, you just want to be putting me on to be repeating this. Okay, no problem. Your PMI is your primary mortgage institution. So let's imagine you find a property that you like, and then it's not any one of the developers that is already accredited. So what you do is you just basically go through your PMI. Now your PMI, because they also recognize the fact that, look, there is 24, I'm sorry, it's up to 25 years. So what they would also do is they would probably do some assessment test on the developer, and at the same time trying to do a bit of assessment on the product, on development itself. So you may need to pay something like an assessment fee to the PMIs, just for them to have that level of comfort that the property they want to invest in is that, because really they are giving the mortgage on the strength of the fact that they believe that that property is going to last 25 years. So yes, if you want to buy property from a developer that is not under the fund, it is possible. It's just that you would have a lot more hoops to jump through when it relates to working with the PMIs. I think somebody asked a question about if the mortgage rate is fixed or variable. Now, the mortgage rate at the point where you are signing your contract is fixed. So whatever rate it's agreed upon, whatever rate at this point in time, the rate is 12%, and that 12% will last for the life of the mortgage fund. So it's not that it's going to be changing over the life. So whatever rate moves at the point where you are signing the arrangement with the PMI as funded by the MREIF, it's going to be the rate. And at this moment, it's 12%.
All right, thank you. Someone else is asking, what do I need to do immediately after this session? So what you need to do is just get on the, click on the link on our bio to visit our website, look at the kinds of properties you can access, and then register your information, and someone would reach out to you, and we can take it up from there. The shortcut, if you want a shorter route, just right after this, send us a DM, your full name, your contact information, and we'll definitely be in touch. Maybe if not this evening, at most tomorrow morning, you'll get a call from someone on our sales team who would reach out to you. Someone else is asking, is the repayment pegged at 33% of one's monthly income?
That's standard. That's a standard thing. And The philosophy behind it is that you shouldn't be paying mortgage that is going to affect your ability to live a comfortable life. Anything above 33% is assumed to be pecuniary, is going to be punitive. So as a result of that, you try not to go beyond that 33%.
All right. Someone is asking, is this session recorded? Ideally, Instagram live sessions are recorded. So after this session, it will still be available on our page if you want to listen again. All right. Is there a price limit to what I can apply for?
There's no price limit to what you can apply for. As long as I've mentioned to you, currently it's capped at 20. It's capped at 100 million. So, for example, if you are buying a property that is significantly more expensive, it just means your equity contribution will not be 20%. You'd have to make more equity so that you can still score. You can still stay within the 100 million cap.
All right. Next, is there a way to calculate if I'm eligible for mortgage? All right. So for mortgages, at Mixta, we have a mortgage calculator that we can use to give you an idea, if your current income and maybe your supplementary income can help you access the amount you want to get. So I would say reach out to us, maybe send us a DM. Someone on the team would get in touch with you and advise you. Once you're able to provide necessary information, we can advise on how much you most likely be eligible for. But this is subject to the approval of the mortgage bank or the commercial bank. All right, another question goes, the Nigerian foreclosure laws are still very primitive. Payment failure by only 20% of subscribers can bankrupt the entire system. What are you doing to improve the laws in this regard?
Okay, so I think the first rule of intervention is that pick your problems gradually. It's impossible for you to completely address all the problems that you have within a particular system, but that were had during the development phase of the fund. But I think the first stage, let me run you through in terms of the first stage. The first stage of the fund at this point in time is actually develop an operational fund that is able to provide mortgages. You don't expect you don't expect significant failures at the beginning. And so what you're going to do is this: once you've been able to get an operational fund, the next thing will now be focused on setting up the right levers to be able to protect the investment and all the parties within the framework. So yes, some of the challenges that you have identified have also been identified during the development phase. And yes, there are thoughts and processes that are being thought in terms of improving the foreclosure laws. Yes, I do agree. Because I recall during those early stages, especially when it came to engagement with even PMIs, they gave feedback that, look, sometimes when it comes to executing foreclosure laws, it takes a long period of time. And, those are some of the inputs that were taken into the operational efficiency that was introduced into the fund. So yes, you'll probably be seeing some of those things going forward, but not at this point where the fund is trying to pick up.
All right. Can the mortgage be used to buy land?
No. That's the long and short answer. No.
All right. Okay. Give me a minute. If I have a plot of land I want to develop myself, can I apply for the mortgage?
No, you can't apply for the mortgage because the mortgage is only given towards a fully completed property. So like I even explained to you, even with regards to developers. So for example, let's say you go and meet a developer who is still within the construction phase. Yes, you can go through the whole process of accreditation and everything, but the disbursement of the facility will not happen until the property is ready. So as it is now, you cannot get a mortgage towards building your home.
All right, next question goes, does the 12% interest apply to the initial loan amount throughout the tenor of the loan, or does it apply to the reducing balance of the loan amount?
Okay, the 12% is, there's the mortgage loan calculator, there's a standard mortgage loan calculator, and that 12% is applied over the life of the loan using the mortgage loan calculator. So that's a standard It's a standard practice within the industry. So I'm not going to go into the magic and everything that the mortgage institutions and the commercial banks do. It's a standard practice. There's already the mortgage loan calculator. The 12% is applied over the life of the loan using the standard mortgage loan calculator.
All right. I do not see any other questions we have. You still have questions? Okay. Someone is asking, could you please list PMIs that may have keyed into MREIF?
Okay, so I know at the moment the MREIF is currently working on updating its website because there's already an MREIF website. I think it's MREIF, I think it's mreif.com.ng. So there's already an MREIF website. So there's some of the information they've already put there. Now, the reason at this point in time why they don't want to put the PMIs that have been accredited is twofold. Number one, they are still in the process of onboarding a lot more PMIs. And at the same time, the full release and launch of the fund is not going to happen until they close out on Series 2. Series 2 is the 100 billion fundraise. So by the time they close out on the 100 billion fundraise, and then you have cumulatively 200 billion, you're going to have the full launch, meaning that at that particular point in time, it was now going to be possible for you to just go on the website, get all the information. So during this period, you still have PMIs going through the mortgage banks and commercial banks going through the pre-qualification phase with the fund.
All right. Finally, someone is asking if Nigerians in the UK can apply for the mortgage.
It all depends primarily on your mortgage institute, your mortgage bank, and your commercial bank. If, for example, there are some mortgage banks even in Nigeria at the moment that maybe because of the correspondence banking arrangement they have with another institution in certain locations in the diaspora, they are willing to offer that sort of lending. So yes, if the PMI or the commercial bank that you're working with is willing to take that level of exposure, yes, sure, you can come on board.
All right, and okay, I know I said finally before, but I think it's finally now. Can the equity contribution be spread over more than 6 months?
That's basically an arrangement between you and the developer. So and you know, it all depends primarily on the qualification process. So there are certain PMIs who tell you that look, they are not going to start the process of pre-qualifying you until you've made your equity contribution. There are some who, based on arrangements of relationship that they have with certain developers, they are willing to do that particular thing, whereby they say that, okay, once you have a developer which is within our network that has agreed that, look, okay, I'm going to give you an offer letter for this product, and this product is going to be ready sometime in the future. Yes, on that basis, they may actually allow you to spread your equity contribution to be more than 6 months. So really, it all depends primarily on the mortgage or commercial bank you're working with and the developers that you're working with. So if the developers and the mortgage and commercial bank have a good working relationship, they might be able to work out something for you that spreads beyond the 6 months.
For bringing this home, at Mixta, are we allowing customers, spread equity over 6 months? The answer is
it's on a product by product basis. So let me explain what I mean by it's on a product by product basis. So for example, let's imagine there's one of our products that we're currently working on whereby we expect to complete those products within a 6 months period in terms of construction. We expect to complete the construction of those products in 6 months. For those sort of products, what you would like here is because for you to roll out developments at a fast pace, whereby you're developing, you're rolling over, you're developing, you're rolling over, you need to be able to turn over that capital. And so for those sort of developments, the best way for you to do it is have people pay equity over 6 months, so that at the 6 months, they've already qualified for mortgage, you get the mortgage, and with the payments that they make on that, you can actually turn it over and start new projects so that you are using that opportunity to serve more people as against just having yourself tied to that long process of delivery.
All right, I think this is a question for me now. So
Okay.
is MREIF, can people start accessing the mortgages now, or is there a future rollout date?
Is there a future rollout? Like I said, you can actually start engaging. You know, the typical thing with regards to mortgages, you go through a qualification process. That qualification process is never completed in a week. So yes, you can actually start engaging with whether it's developers or commercial banks or mortgage institutions. You can actually start engaging with them at this time. There's a process you are going to go with them. So like in terms of the fundraise, like I said, the fundraise is ongoing. Give or take, the fundraise should be completed this month, and there should be a formal launch of the fund this month. Even though the fund is launched this month, you still have to complete the pre-qualification process with your mortgage bank and your commercial bank. So you find out that even if you start that process, by the time the fund is launched, you still will not be ready to draw down on whatever mortgage that you're trying to. So yes, you can start engaging. Long and short is this: you can start engaging with developers, commercial banks, and mortgage banks at the moment now.
All right. All right. Thank you very much, Tola. I think we're pressed for time. Thank you so much, everyone, for joining this live session. I hope we've been able to answer as many questions as possible. I also hope we've been able to enlighten you, share as much information as we have, on the federal government's plan with respect to MREIF. If you have other questions right after this session, please feel free to DM us. If you want to get in touch with us, please feel free to visit our website or send us a DM, and someone will definitely contact you within 24 hours. How can we access the price list of Mixta's properties that are available for sale? So just visit our website. The link is on our bio. But if you want someone to share this information with you personally, please send us a DM, and someone on the sales team will definitely reach out to you. So thank you so much, guys. And I hope that following this session, a lot of us become homeowners later this year, sometime next year, as a result of this. So thank you. I'm definitely going to work on this. I hope you do too. So thank you
Thank
once
you.
again, Tola.
Yeah, thank you very much. Yeah, appreciate the time. Yeah.
Thank you. Thank you so much, Tola.
Okay.
Please, if you have questions about what we do at Mixta, you want to check out our projects, please feel free to visit our website. The link is in our bio. There are even VR, there are, virtual reality options, even on the website, have a view of what some of the estates look like. Someone in the audience is saying thank you. She says thank you for the enlightening session. Tell her this is for you. Thank you so much.
And thank you very much. Appreciate the feedback.
Yeah.
Thank you.
Bye-bye.
Yeah, okay. Bye.